Dustin Tibbetts, your new financial advisor. Check us out at jazzwealth.com. Well, today we're going to talk about, is a financial advisor actually worth it? And the short answer is no. For some people, it's not worth it at all to have a financial advisor of any kind. Now, I like to think we're changing that because we don't actually require that you have any sort of minimums to get started. We don't have any sort of initiation fees, things that we charge to sort of scare away people that are just beginning. So in reality, we are open to everyone, but the short answer is no. An advisor is not a good fit for absolutely every person on the planet. One of the reasons, and I get really excited about this, is when people have an interest in their investing. If you like picking stocks or finding neat ways to balance exchange-traded funds or mutual funds, if you like using covered calls, day trading, whatever it may be, I would never, ever take that away from somebody. I've actually had many calls where people say, I'm thinking about doing this or that, and I can tell that they're interested in it, and I won't do anything. I'll say, you know what, you should probably do that yourself. Happy to help you along the way, watch our videos, of course, but I would never say that they should come join us here at Jazz Wealth. Now, on the other hand, there are people that just don't have the time, don't understand it, or maybe a little bit fearful of it. And so in that case, I like to think we have a business set up that works with absolutely everybody. But let's take it a step further. Vanguard actually did a study, and I believe it was called Quantifying Vanguard's Advisor Alpha. That was the name of the study, if you can remember that. And they actually studied to see if having a financial advisor actually added any value to anybody. Now, if you look this study up, be careful. They were very specific about the type of advisor. There are many different types of advisors. Some sell products, some only work for you, which are known as fiduciaries, and that's what we're focusing on here today. Well, Vanguard came up with a study that they actually found that a financial advisor adds as much as 3% a year in value or returns to the client. And it's not because they were picking the best stocks or they were doing something. One of the primary reasons was because they kept you from doing irrational decisions, making irrational trades, or reducing or expanding in times of fear or greed. See, a lot of people get excited when the markets go up and they want to put more and more and more in. And it's an advisor's job to say, that's great, but let's stay consistent, right? Let's stay with what the plan is. On the other side of that, when the markets start getting a little bit scary, it's the advisor's job to say, let's be consistent. Look, buy at a discount, help you through those periods where you might be nervous. A great example was a client that was actually very scared last year when Donald Trump was potentially going to become the president. They wanted to essentially go move to gold, do lots of different transactions to make sure they weren't in the stock market. And after a brief conversation, we said, look, every time a president gets elected, half the population is not happy. Half the population is fearful, but yet the markets move on year after year. Well, talking that person out of it actually saved them about 9% in returns that they would have otherwise missed. So that's kind of what Vanguard's talking about in this study. It's an okay study. It's actually pretty boring if you don't like reading a lot of big words, but otherwise I would agree with their study. Now, Morningstar also did a study. They called it their Gamma Advisor Study, I believe. I'm not sure why they called it that, but they actually found that an advisor plays an even greater role because of things like asset allocation, right? How you choose the investments that you pick. While you may be a great investor and able to pick the next great stock or exchange-traded fund or whatever, most financial advisors play that slow and steady game and will beat that person in the long run. So that was one of the reasons. Tax efficiency was another one. How to manage your portfolio with the greatest tax advantage to you. We have a lot of clients that have rollovers, which are now traditional IRAs, but they also contribute to Roth IRAs. There's a lot of great tax games that we can play there when you get to retirement. Also, setting goals. It sounds pretty basic, but specifically, what numbers do we need to get you to whatever your goal is? And when that goal changes, how do we need to adjust those numbers? So again, doesn't fit everybody, but for a lot of people, that's a great value as long as you're working with someone that is not ripping you off by selling you insurance-based products. Well, I hope that helps. Is Jazz Wealth a good fit for you? Maybe, maybe not. The point is, we only have ourselves to sell, and if ourselves are not a good value to you, we're going to tell you that and send you on your way somewhere else. If we are a good service, then I hope that you'll consider us here at Jazz Wealth. In the meantime, if you would, go click over here and I'll tell you why you never should take a loan from your 401k. Really, there's a lot more reasons. We'll probably do that video again. But if you like what you see, hit subscribe up here at the top. Really helps us out so much. Thank you. We'll talk to you soon.